The Fed pivot has come just in time for the 2024 presidential election. Hello, this is Chart GPT today. Well, we've had the decision coming out of the FOMC meeting today, and it was fairly dovish, and we'll get into that. But just before we do that, we want to take a look at some preliminary data here. We had some CPI data that came out. CPI is coming down. It's down, getting close to that 2%, around 3 to 4%, depending on if you look at core or the CPI overall. Core tends to move a little slower. It's more of a moving average sort of thing. And here's the PPI, the producer price input prices here, and it's also coming down well below 2%. So the Fed probably felt that they're doing their job. And here's the kind of the movement downward. It started earlier in the week. You can see here September for 2023, 5.6, 5.4, and some of these have been coming down for the out year. So this is what they've been kind of signaling. And here's where they were at prior to the meeting. All of the Fed dot plot, if you don't know, these are the different opinions of the FOMC members, and they have been all way over what the market was suggesting, so they were out of touch. So they're trying to get back into line. Anyway, so the Fed didn't cut, but they basically hold rates steady. So they're basically implying in their statement that they're going to be cutting in 2024 now that inflation has come back down. Their dual mandate, price stability and employment, is steady, so they've done their job. Yay, they'll say. But is inflation built in for future economies? This is to be seen. A lot of people think it is there. We'll be reporting on that later in future posts. But here's where it was. You can see a dot now way under 4% compared to what they were. So they're trying to get back in line, but they're still pretty high. So we'll see going forward. Here's kind of what other countries are doing. I used the Bank of England here, and they're signaling that they could be cutting. So we could be looking at a global rate cut, which is going to bleed into inflation. This inflation story is not over, in my opinion, but it's calm now until they reignite the economy for these elections going forward. We've had this opinion for quite a while now. If you go back over a post, we've said it might come down to 2.5% just in time for those elections. Might be a little bit too aggressive on the rate cuts, but it depends on a couple scenarios. And of course, then after the elections, we're off to the races again. We've been using the 2 years, our bogey here. So we got scenario one. If there's no geopolitical risks that would make the Fed move even more aggressive, we may get down to 3.5%. And under scenario two, if we have something very serious happening on a geopolitical basis, which is a very high likelihood, maybe give these about 50-50 chance, you can get down to that 2.5 before the election, or near to it. So those are kind of your scenarios going forward. We asked the AI what kind of things happen to both stocks, bonds, and commodities when Fed starts to cut their rates. And the question we ask you in the polling, do you think these Fed rates are politically motivated in time to help out the Democrats and Joe Biden in the 2024 election or not? Don't forget to subscribe.